Hey there, future Wall Street wizards. Welcome to the exciting world of the stock market, where fortunes are made and financial dreams come true. Whether you're a complete novice or someone with a bit of knowledge, this guide is designed to help you navigate the complexities of the stock market with ease. Ever wonder how the stock market works? You're not alone. Many people find it intimidating at first glance with all those numbers and charts, but don't worry, we're here to break it down for you. It might seem confusing, but trust me, it's not as complicated as it sounds. With a little bit of guidance and some basic knowledge, you'll soon see that the stock market is not just for the experts. It's for everyone who wants to grow their wealth and secure their financial future. In this beginner's guide, we'll break down the basics of the stock market in a way that's easy to understand. We'll cover everything from what stocks and shares are to how you can start investing with confidence. Think of it like learning a new game. Just like any game, the stock market has its own set of rules and strategies. Once you understand these, you'll be able to play the game and hopefully win. We'll start with the very basics. What is a stock? What is a share? How do they work? These are fundamental questions that we'll answer for you. What is the stock market and why should you care? The stock market is a place where you can buy and sell shares of companies. It's a way for businesses to raise money and for investors to own a piece of those businesses. Get ready to learn about stocks, shares, and all those financial terms you've heard about. We'll explain what they mean and how they affect your investments. We'll use simple examples to help you grasp the concepts. For instance, think of a share as a small piece of a company. When you buy a share, you own a part of that company. By the end of this guide, you'll have a solid understanding of how the stock market works. You'll know how to read stock quotes, understand market trends, and make informed decisions about your investments. It's time to demystify the world of investing and empower you to take control of your financial future. Let's get started. With the right knowledge and tools, you can become a savvy investor and achieve your financial goals. So buckle up and get ready for an exciting journey into the world of stocks and shares. Imagine a giant online marketplace. It's bustling with activity. People from all walks of life are buying and selling things they need or want. But this isn't your typical marketplace. Instead of shoes, gadgets, or groceries, the items being traded are pieces of companies. Yes, you heard that right, pieces of companies. But instead of shoes or gadgets, you buy and sell pieces of companies. These pieces are known as stocks or shares. When you buy a stock, you're essentially buying a small slice of that company. It's like owning a tiny part of a big pie. That's the stock market in a nutshell. It's a place where these pieces of companies are bought and sold. The stock market is a dynamic and ever-changing environment filled with opportunities and risks. It's where fortunes can be made and lost in the blink of an eye. Companies need money to grow, right? They need funds to develop new products, expand their operations, and hire more employees. To raise this money, they sell small pieces of ownership in the form of stocks. This process is known as going public. So they sell small pieces of ownership called stocks. When you buy these stocks, you become a shareholder, which means you own a part of the company. This ownership gives you certain rights, like voting on important company decisions and receiving a share of the profits in the form of dividends. When you buy stock, you become a part owner of that company. Pretty cool, huh? This means you have a vested interest in the company's success. If the company does well, the value of your stock goes up and you can make a profit. On the flip side, if the company doesn't do well, the value of your stock can go down. The stock market is where these stocks are traded. It's a centralized place where buyers and sellers come together to trade stocks. This can happen on physical trading floors like the New York Stock Exchange or through electronic platforms like NASDAQ. It connects buyers and sellers, making it easy to invest in companies you believe in. Whether you're a seasoned investor or a beginner, the stock market provides a platform for you to buy and sell stocks with relative ease. It's a place where you can put your money to work and potentially grow your wealth. Think of it like a giant auction house, but instead of bidding on art, you're bidding on the future success of a company. Investors place bids on stocks they want to buy, and sellers offer stocks they want to sell. The price of a stock is determined by supply and demand, how much people are willing to pay for it, and how much sellers are willing to accept. The stock market is essential for a healthy economy. It provides companies with the capital they need to grow and innovate. This, in turn, leads to job creation, higher wages, and overall economic growth. A thriving stock market is often a sign of a strong economy. It helps businesses raise capital to innovate and create jobs. When companies have access to the funds they need, they can invest in research and development, open new branches, and hire more employees. This leads to more job opportunities and economic growth. And for you, it's a chance to grow your wealth by sharing in their success. It's a win-win. By investing in the stock market, you have the opportunity to benefit from the growth and success of the companies you invest in. Over time, this can lead to significant financial gains and help you achieve your financial goals. Let's talk about the building blocks of the stock market: stocks and shares. These are the fundamental units that make up the entire market, and understanding them is key to becoming a savvy investor. A stock represents a piece of ownership in a company. When a company decides to go public, it issues stocks to raise capital. This allows the company to grow and expand its operations. When you buy a stock, you're buying a tiny slice of that company. This means you have a claim on part of the company's assets and earnings. The more stocks you own, the larger your claim. Shares are simply units of stock. They represent a portion of the ownership in the company. Companies issue shares to investors in exchange for capital, which they use to fund their business activities. So if you own 10 shares of Apple, you own 10 small pieces of Apple Inc. This ownership entitles you to a portion of the company's profits, which may be paid out as dividends. Now, what about those market indices you always hear about? Indices are essential tools for investors, providing a snapshot of market performance. Think of them like scoreboards for the stock market. They track the performance of a specific group of stocks, giving you an overall picture of how the market or a segment of it is doing. A market index tracks the performance of a group of stocks. These groups can be based on various criteria, such as industry, market capitalization, or geographic region. The S&P 500, for example, tracks 500 large U.S. companies. It's one of the most widely followed indices and is often used as a benchmark for the overall U.S. stock market. Indices give you a sense of how the overall market is doing. They help investors gauge market trends, compare the performance of different sectors, and make informed investment decisions. Understanding these basic terms is crucial for navigating the stock market. Knowing what stocks, shares, and indices are can help you make better investment choices and understand market movements. It's like learning the language before traveling to a new country. The more you know, the more confident and prepared you'll be to navigate the complex world of investing. Ready to learn the steps of stock trading? It's easier than you think. You'll need a brokerage account, which is like a bank account for your stocks. You can open one online in minutes. Once you've got your account, you can start buying and selling stocks. When you buy a stock, you're betting that the company will do well and its stock price will go up. If you're right, you can sell your shares for a profit. Of course, if the company doesn't do well, the stock price might go down and you could lose money. It's important to research and invest in companies you understand. Remember, investing in the stock market involves risks, but it can also be very rewarding over the long term. Section 5, Supply and Demand, the heart of the market. Remember the law of supply and demand from economics class? It plays a big role in the stock market too. The price of a stock is determined by how many people want to buy it, demand, versus how many people want to sell it, supply. If a company is doing well and everyone wants a piece of it, the demand for its stock will be high. This drives the price up. On the other hand, if a company is struggling, investors might want to sell their shares, increasing supply and pushing the price down. Understanding this fundamental principle helps you make sense of why stock prices fluctuate. It's all about the balance between buyers and sellers. Section 6, the economy and your investments. A close relationship. Here's a newsflash. The stock market and the economy are best buddies. When the economy is strong, businesses thrive and stock prices tend to rise. Conversely, when the economy weakens, businesses struggle and stock prices may fall. Economic indicators like interest rates, inflation, and unemployment rates can impact stock prices. For example, rising interest rates can make it more expensive for companies to borrow money, potentially hurting their profits and stock prices. Keeping an eye on economic news can give you valuable insights into market trends and potential investment opportunities. Remember, knowledge is power in the stock market. Section 7. Jumping into the market, a beginner's guide. Ready to dip your toes into the exciting world of stock market investing? Here are a few common ways to get started. One popular option is investing in mutual funds or exchange-traded funds, also known as ETFs. These are baskets of stocks that track a particular index or sector, offering instant diversification. Another approach is to invest in individual stocks. This requires more research and analysis, but allows you to pick and choose companies you believe in. Remember to start small and gradually increase your investments as you gain experience. Investing in the stock market is a marathon, not a sprint. Be patient, stay informed, and don't be afraid to seek advice from financial professionals. Section 8. Keep learning your path to stock market success. Congratulations on completing Stock Market 101. You've learned the basics of how the stock market works, from stocks and shares to supply and demand. Remember, this is just the beginning of your journey. The stock market is constantly evolving, so continuous learning is key. Read books, follow financial news, and consider taking online courses to deepen your understanding. As you gain knowledge and experience, you'll be well equipped to navigate the stock market with confidence. Investing in the stock market can be a rewarding way to grow your wealth over time. So embrace the learning process, stay informed, and watch your financial future bloom.